Hello traders, welcome to FreeFX. I'm Francesco. So today we're going to talk about the SPX and obviously what's been happening. And today being the 31st of October, let me wish you a happy Halloween if you're celebrating. And obviously we are going to make it as spooky as possible. But without further ado, let's go and see what the charts have to tell us. So the first thing we can see is the daily chart. We have a lot here which seems to want to tell us that there's something ahead. Something ahead, of course, is the federal rate decision. Federal Reserve is going to hike rates by 75 basis points or 0.75%. We know that much and we're not going to be surprised by that. But obviously, it's very, very good to have a plan. My intention here is to try and describe technically where we are, and I've done this already obviously in my last video on Saturday morning, and this is a much of a repeat of that in some ways, but in some ways not. So please stay tuned and let me show you a little bit more about this. Now, if you haven't seen the previous video, this is the support and resistance that I've laid out. We kind of really got up to that. As you can see, it's the 13900 level, and it's supported the S&P previously. If I just kind of stretch back to as I said, September was support, and also May and June. As if you go back further, you see how in May and June this was support. If I go back to this, there we go, that's kind of May and end of May, start of June. And it was also resistance in June and July. So if you look at June there, 29th, end of June, July, and then we had the so-called bear market rally, and this is the level. So where are we with the level? Well, obviously it's a strong level and it's holding so far. It's held when we got below it back here in the middle of September. So a month and a half later, we are at this level once again. I pointed out before in my last video on Saturday, which was actually done on sort of with Friday data, that the options were somewhat strong at 39.80, 39.90 for calls. So essentially for long S&P, and for short, so puts 37.50 in the eventuality of the S&P falling to those levels. So that was the biggest open interest percentage change in contracts on the long side and on the short side at those prices. So that might change because options change quickly, and we might have a different set of prices. But I'm not going to go into that because it's neither here nor there. I'm more interested in the SPX itself. And you can see here that we have two things. The first one is we have the red candle forming on the daily. Now it's a small candle, but nonetheless, we have this candle. Back in on Wednesday last week, in the middle of last week, we had a doji. Then we had a down candle when some of the earnings kind of didn't go particularly well. The Friday was a big pull-up, and then a red candle. Now, this could be just a red candle in a series of green candles, or it could be the sign of something. Now, the 3900 is clearly quite a strong level. So that appears to be a very important level. So this here is critical. I'm going to keep that arrow there for a second. I'm going to go down to the 4 hourly and see what happens. Right. So there's a 4 hourly, and you can see that we have the divergences that I highlighted before on the CCI. Now, and I think it's very important that we have a sense of proportion with these divergences being quite short-lived. 14th to the 19th, so that's 5 days. Sunday 23rd to roughly 27th, Thursday, and then we had another peak up, and then there's no divergence because price has moved exactly as the CCI. So currently we've kind of peeped above the 200 plus level, and that's been rejected. So price has been rejected and that level as well. So where does that leave us? Well, very uncertain territory really. Let's kind of just go back to the daily for a second, because I want to show you what I didn't show you on the previous video, which is the VIX. So the VIX is actually very interesting because I had this actually on the last video, which is the 10-year I think in my last video I said 10-year yield is actually the price, not the yield. The yield will be inverted, so it'll be the other way around. Price, as you can see, for the 10-year has sort of tracked the SPX, and that's kind of where we are. So that doesn't really add much information, so in fact I'm going to delete it. I was just kind of having a look at that just for my own. And the VIX, however, is doing this. So one of my last videos I was saying that this is a double top almost, and we had that there and there. So we're kind of cruising around these levels. The highest is sort of 33 point something, and then we sort of plummeted down to these levels. We're at 25 at the moment, 25. Now a while back I was going on about the 20 level being a make or break, and sort of getting above that 20 level after the so-called bear market rally was very important. So we eventually in August started climbing above 20, and that was a good thing for me. And then it sort of even made a conjecture that we could have a sort of trend line, and we've sort of broken that trend line now, really truly. So the VIX is really just a derivative of the options based on the SP 500, so it's not really a leading indicator. So we can just maybe hide it, but I just kind of want to show you that we are in the mid-20s at the moment, so it's not really a sign of capitulation or panic in the streets or blood in the streets, so that doesn't mean as much. Let's bring back our friend the WMA 21 period, and we are above it, of course, so that's one thing. And if we bring back the Bollinger Bands, and that's where we are, we're kind of pushing against the higher band, which also coincides with this May, June and September support and June, July resistance level at 3900. And it's no coincidence. So we've expanded the bands a little bit, and now we need to see what happens next. On the actual CCI for the daily, we can see there's a bit of a divergence there. So price climbed from the 24th higher, and this is kind of being actually coming down. These orange random signs are actually lined up with a 4-hour chart, so excuse the confusion. Excuse the mess. I'm going back to the 4-hour there. So on the 4-hour you can see quite clearly the Bollingers there. We're just kind of coming off the top band there, and the 21, we're sort of above both of these. So you know, that doesn't tell us much that's significant, but still it's good to know reference points for these are strong, and potentially we can come down a fair bit. But having said that, the bands are sort of nicely trending up. We've been roughly above the 21 WMA and the 20 SMA simple moving average, and clearly there isn't really much else going on except these. So it's quite hard to really pinpoint anything that's particularly you know, I'm short at the moment. As you can see, I'm in the negative on that trade. I've had a horrendous end of last week was not particularly good. I was kind of doing okay, and I was kind of managing trades, and I was away for a bit on the Wednesday, and then everything went horribly wrong. So I'm sort of kind of licking my wounds, but I'll bounce back. It's just one of those things, just kind of watching trades. So I'm short from this level, 37.80. We're currently at 38.76, so not quite 100 points, but more or less. So my target is down here. So my target is actually at 35.62 there. So this level is based on not just that was a CPI release level there. So I'm sort of wanting to go down to those levels, and it's quite clear if you look at the weekly where that is. So the weekly, you'll see there the Bollinger Band expanding, and we're just sort of at those levels, the bottom of those candles. And so I'm wanting to get there. Quite interesting as well on the weekly, when you see the Bollinger Bands and you see the 21 weighted moving average and the 20 SMA, i.e. the basis, or the orange line there, which is the middle area, if you like, or the Bollinger Bands, and that concentration there of the two moving averages, the 3900 level and this down candle forming is very poignant, because we are basically on the weekly, on the daily we're sort of uptrending, but on the weekly we are technically still in a downtrend. We sort of pierced above there during that so-called bear market rally of July and August, but actually we're still in the downtrend because overall we'll be making lower lows. The lowest there is the 26th of September. So we are, we contracted here on the bands and we're sort of expanding again. So I think this, has potential, and you'd have to sort of, well, it's difficult to say how deep this would be, but if you measure that from here, see if I'm able to do it, or I have to maybe use this. There we go. If you measured it from there to there, the bottom end there, it's 16%. So 16%, if I did that again from current level, okay, 16% would take us much further than that. It would take us to, yeah, about here. So below that pre-pandemic high, it would take us to what, 32.50 or something, about there. 32.50. Okay, so it would actually be a bigger target than what I've got now, but that's kind of just being greedy. Again, also on the weekly, the CCI, just bear in mind, we're coming up to the 0 or neutral level. Last time we came there was back here in March, and we had a big downturn there. Again, as I said, big turn. That's maybe comparable to that one that I just measured, 16%. And if you wanted to be really specific, you could measure that one as well. So we're measuring the CCI kind of area here. But on price, that would give us about 14%. So we definitely end up lower than the pre-pandemic high, and that would be a great trade. So I'm trying to kind of manage my expectations, but I want to get there and sort of pile on some leverage and really get, manage that trade and get some leverage and get money working for me on that final leg. Let's call it final, because it could be the final stretch of this move, starting from December, January, and that's kind of what we're aiming for. In terms of events, we got the Federal Reserve, the FOMC rate decision this Tuesday, Wednesday, and Wednesday will be the announcement of the rate decision, and that is in the evening UK time, and then we've got the press conference as well. So if you watch that 7:30, start sort of getting ready and see where Powell and the team are at for rate decisions, for hikes. We know 75 basis points pretty much guaranteed, but also the language in the press conference. Okay, so the language in the press conference is very important. You might think it's insane because it's been the same for months, from the Jackson Hole Symposium in August to all the press conferences, and still we sort of try to push back at this these equities that try to kind of gain ground, but really it's a case of, as Michael Kramer on Twitter was saying, on his YouTube channel, in fact, on his video, last video, basically this is a case of the Fed not wanting conditions to ease. So if prices rise on something like the S&P 500, that's a sign that the perception is that conditions are easing, and that would be counterproductive because the Federal Reserve Bank, in fact, is trying to tighten conditions. And so they're kind of basically, they're having to keep reminding, reminding is the wrong word, but the rhetoric has to be piled on, as well as the cutting of liquidity from the system, is to remind people that the course, the trajectory is set, and there's no deviation from that. So very important in the language on Wednesdays that it's kind of following that path. There is no pivot, as some people call it, and they're not going to stand for taper tantrums like in 2013. There's no bullying. One of the largest central banks in the world, they will do their inflation fighting QT, and that's what they're there for. unemployment is under control. So the dual mandate is the second thing of that component is mandate is inflation. And they, it used to be 2% was the target when inflation was below 2% during the Bernanke and Yellen era. But now obviously that's changed, that the inflation target is below what it currently is. Whether 2% is the final target, but certainly there's a way to go there. So we'll just have to wait and see. I'm looking forward to that, and I hope you are too. Thank you very much for listening. You've been great, so please leave comments as you do. I'm delighted to hear from you. If you ever want to drop me a line, I'll be happy to reply and sort of see if there's anything you're interested in and maybe feature it in the next video. Important announcement. On Thursday, I am going to be interviewing a trader, and so my video will be released on the Friday, and that will be a video, a special number. It will be a special issue, and it will be the first video of November, and it will feature a special guest, another trader that I'm looking forward to having a conversation with about, trading and other things. So please tune in on the next video, end of the week, to see what my special guest has to say about these markets. Thanks very much. Take care. See you soon. Bye.